So 7.1 is account statements for credit cards. We're going to calculate the new balance on a charge account. What is a credit card? You take it to the store, give them the credit card, it goes on your account, and you pay it later. The convenience of a credit card would be you don't have to pay it today, like a check would be, or a debit card. You pay it whenever the statement comes. You can get in a lot of trouble when you use a credit card because you pay it later. If you're not keeping track of how much you have on the credit card, when the credit card comes, the credit card bill comes, you could be like, wow. And then, well, how are you going to pay for it? So when you get the credit card, they charge you a certain percentage of what's there. They'll say, this is the minimum you have to pay. So if you have $500 on it, maybe you have to pay 60, or 20 or whatever it happens to be. I think there's a credit card calculator online that if you put in the amount that you owe, and if you pay the minimum balance every time, it'll calculate out how long it's going to take you to pay that money off. And it's generally a long time. So my advice to you is use the credit card and then pay it off when you get the bill. Some credit cards offer like incentives, like I have a credit card through Shields, and each time you use the credit card, you can use it at any place that you want, groceries, Fleet Farm, West Acres, wherever. And then each time you use it, you get a percentage back. So they'll send you gift cards to Shields. There's one that takes place at Fleet Farm as well. So if you go to Fleet Farm a lot, and then when you shop at the place that the card is from, you get more back in those cases. So there's some that you actually get, something back by using it. A credit card then is a card authorizing purchases on credit. It's a buy now, pay later. Charge account is an existing line of credit at the business that issued it. You can buy now and pay later at that particular business. So some credit cards you can use anywhere. Some are just for the actual place that the credit card is from. If you have one from, like, for instance, a store in the mall, it's probably just for the store in the mall. That's the only place you can use it. If you have one that is that has a Visa on it and it isn't specified, you can use it anywhere. An account statement, it lists your previous balance, your finance charge, your purchases, your payments, your credits, and your new balance. We'll look at one of those in a little bit. A finance charge, if you don't pay your balance in full when you get the statement, then you have a little finance charge the next time. If you do pay off your balance, then you don't have to pay a finance charge. So if you charge $100 somewhere, when you get the bill, you pay the $100, you don't have a finance charge then. If you charge $100 and you only pay $20, then you have a finance charge added on to the next bill. And that's kind of how those work. Let's look at page 286 for a charge account statement for Marina. Each of these charge accounts will look a little bit different. It depends on the place that's issuing them. There's a lot of information that they kind of have in blue there. It'll have your account number on there. It'll have your name, your address. It'll have all the activity that's been on the account or the charge card. The date that you actually use the card. If there's a department number, a lot of times that's not even on there. The description of the item. It'll tell you if it was a purchase, if it was a credit, if it was a finance charge, if it was a payment. It'll all have a specific column there. Why would you have a credit on your credit card, do you think? Instead of buying something, what did you do? You maybe bought something and then returned it. Yeah. So if you buy something on a credit card and you take it back, they're not going to give you the cash back. They're going to put it back on the card that you actually paid with. So initially your card was debited. When you take the item back, they credit back the card. So you never really get to go buy something and then when you return it, get the cash back. So that's something that people kind of misinterpret sometimes. At the bottom, it's got a variety of different things. It has the previous balance, the finance charge, how many purchases, that's the total, the credits, and then any payments that you made, and then you have to find out what the balance is. So when we're looking at that one, here's how it's figured in, and there is a formula on the back side of that page. You take your previous balance. The finance charge is something that they're charging you for, so that makes your balance bigger. So you're going to add that in. Purchases, again, it's going to increase the balance on your card, so those are added in. New purchases are added in. Payments are taken off, and credits are taken off. So we're going to actually figure out the balance, or check the balance. So her previous balance was $332.64. You add in the finance charge. You add in the purchases. And then you take off the rest. You're going to take off the credit. They probably returned an item. And you also take off any payments that were made. And once we calculate this, that would be the new balance. So $332.64, we're adding in the next two things. Taking away the $31.94 and the $50. $429.37. So it's kind of like your checkbook, kind of. Doesn't it remind you of that a little bit? The checkbook never really had any finance charges on it. They called them service charges, but you did add them in. So service charge and finance charge are kind of the same thing. Here, though, when you add things in, it's new purchases that you've made, so it makes your balance get bigger. That's why you add it in. Payments make your balance get smaller. That's why you take them out. And then credits will take the item out of your account, which also makes it smaller. And that's it. Okay, so this is an example number 9, just to show you what you have to do once you get to that point. It says the previous balance is $1787.29. Then it says you made a $200 payment. Do you add that in or take it out? Take it out. So I'm going to subtract 200. So you can just do these when you encounter them in the problem instead of doing them in the order that the formula gives you them. The new purchases include $47.97, $49.28, $83.21, and $75.63. I would add all those together before I put it on the paper. So I want to see each number that's in there, but you don't have to write every single one of them. So I'm adding those right now. 47.97, 49.28, 83.21, and 75.63. So I'm going to add 256.09. Then it says a finance charge of $11.81. Do I add that in or take it out? Finance charge is like a service charge, so you'd add it in. So I'm going to add that on. And then a credit of $45.89. So that's something that you returned. It's going to make your balance smaller. I'm going to subtract out $45.89. So that's kind of an example of what kind of work you have to show. So the only thing that really wasn't split up was this one. There was a bunch of numbers in the question. I just added them in first before I put them on there. So once we get the answer for this one, then we would be done.